All right, traders, this is your quick midday update, and this is Christian from Hertz Tribeca Trade Group. So to start off the day, these are all things that we went over already, but really what kind of caused this move in the first place, I think this morning was just the China Shanghai opening up again. It opened up about down around 2%, but it continued to melt down throughout the session, down 4.3%. A couple other areas like the Hang Seng, which was open last week, opened up in the green last night and closed on the lows. Then if you kind of turn over to Europe, you could see that this wasn't much better, although not down quite as much. It did kind of continue to trickle lower throughout the session. They are now closed. The DAX finished down 1.4%. The FTSE, which is really the has been the big laggard the last couple of weeks, down another 2.4%. So pretty hit pretty hard there is the Italian market. So that market's those have all closed mainly around 11:30. In the U.S., we've had more volatility creep back in. You can see the VIX did take out yesterday, but Friday's highs were up to 1740, but we've come in pretty decently. It's been more of the same. Some of those things that I talked about in the weekend newsletter. Big rotation out of small cap growth and into large cap value. If you look to see in the beginning of the day, we're seeing more of that. IVE, which is there's a bunch of these different value ETFs. That's another one. The IVE S&P Value. That's an iShares products. Right now, 7.4 times normal average volume for this time of day. So, a move into value this morning. It looks like that volume has tapered off. I think a lot of that volume happened in the first hour. But if you look at the best performers, they're kind of what we saw in the beginning of the day on Friday as well. All the defensives are outperforming. So utilities, XLU is up over 1%. So is XLP. Consumer staples, and REITs IYR. So even though these are interest rate sensitive areas of the market, fear right now is trumping over the interest rate move. TLT, speaking of interest rates, that's not the problem today, other than what the damage done last week and the move up in rates. But TLT is basically flat or unched for the day. Also, the banks are starting to move into the green today too, which is a little bit of progress. But if you look at some of these growth areas, the first one that I wanted I'll talk about some individual names quickly because I only want to keep this video about a little over 5 minutes long. But this is the internet ETF. This has really what got me worried last week because it came out of this coiled, not the right way, not which way I thought it was originally going to go, but it's moved all the way down, and I think it's realized that downside target today. So I think, and if you look across in a couple single names like Amazon, I think all of those targets in terms of these purple lines, as far as the ones that are close by, let me just preference that. But if you go to the 5 minute, you're going to see that we had another one that was taken out. Now we had a bunch of these taken out last week, but there was another one that was taken out. It'll take a minute for my Thinkorswim to catch up here, but one here, and then this was the last one at 1844. Again, just have to give my Thinkorswim a second to catch up, and you should see that. But we're seeing a lot of those being taken out in the FANG stocks. And if you kind of go through this group, there it is right there. It's actually 18. Might adjust again. I think it's 1844, but you could see that purple line. There you go. Thinkorswim just takes a bit. And I don't see any more on the 5 minutes. So that's the last one. We'll see if it holds. Now, it didn't. I thought it might have held because, again, once these are really far apart, they become less important. But once they break a value area, then they become important. So we'll see if this one holds. It's the last one I see for Amazon right now. So we may not get a bounce today, but maybe sometime this week. I would keep an eye on this stuff. All right, your VIX, which, like I said, did take out yesterday's highs. It hit 1838. Also the VXN, which is the VIX for the Qs. A little bit off the highs, coming in a little bit. And then RVX, which is also up 7%, but really the damage was done last week, and that was a good leading indicator of what we've seen so far. And if we go to IWM just to see where this is hanging out at, down 70 basis points, we'll see. It's right at last week's low. And that's at the 200-day moving average. This was another VPOC that I thought was instrumental, but it seems like the damage has already been done here. Now it seems like more larger larger cap growth and software and internet names are getting hit. So yeah, taking a look at that group too, software. That's the IGV ETF. That's down over 3% today. Cyber names are down 2.9%. That's Hack or CIBR. The FDN, which I just covered, which is your FANG stock ETF, is down 2.6%. And then a lot of healthcare, which happened as well. So, it's not just tech. It's basically just anything growth and anything higher beta, because you look at what's going on here with the biotechs, they're also down 2%. XHE, which is medical equipment, these were some really, these were your best performing stocks for the most part of the year. This is another one that's been absolutely getting smoked. This is small cap healthcare, which was up at one point like 40% year to date, just coming in very, very fast at this point. So we'll have to start to see the brakes be put on some of this stuff. I could tell you the option activity. We started to see the put call ratio. I would say day one of the sell off, which I kind of felt like was the end of the day, Wednesday, maybe Thursday. Was really when broader things were being effective. Clearly, the small cap started to go down before then, but in terms of overall growth and mainstream sell-off, Thursday was your first day. We really didn't see a heightened put-call ratio that day. Friday, we started to see that, a lot more put buyers coming in, and the put-call ratio got to around 1, which again means that fear is really coming into the market. And usually once you see a couple days, typically, right? Typically once you see a couple days of the put call ratio around 1 or above 1, you know that it's getting pretty washed out in terms of sentiment. And, usually there's a bounce on the horizon when that happens for at least one day. But the option activity, all of the call activity that we've seen in the morning, we saw a little bit of Netflix calls, we saw a little bit of Facebook's calls, but all weekly stuff. And what that tells me is it's not a lot of capital commitment. Where we've seen a lot of the puts is a little bit further out, and you could see IWM puts, SPY puts, puts, IWM, a little bit of calls here, but puts, I mean, all the way down here. And if you look at, just kind of what we're seeing in the queues, you could see just a lot of put activity. If I even take this off sweeps and just look at the overall activity, it's pretty heavy to the put side. So again, kind of a contrarian thinking is that once all these big put buyers come in, they're usually, this is not the smart money, this is the oh no, I need to buy puts. This is not the real stealthy, smart put buying. This is I call it dumb put buying if you're buying puts today. All right, so that's basically the run through that I wanted to give. A lot of names. I mean, you could just go across certain names, and there was definitely technical damage in the charts on Friday. But look at Square; it's down 10%. It's only into the 50-day moving average. So, pretty crazy, but it's, this is what happens sometimes when price gets way above the moving averages and way above the 50-day moving average. That's usually a danger sign when you see things get that extended above the 50-day moving average. Well, you don't have to worry about that anymore. Again, the main point of this is, some of what we're really seeing is a growth and a high beta sell-off and unwinding that's taking place. But, I think we're getting close, even though it's only a couple days into the sell-off. These targets that I see being taken out like this, I think you do have to kind of wait and let things stop going down as fast as they're going down right now. But I think that we're starting to get to the end of it. But I think for now, you just have to be patient. If you're starting to add some trades, I mean, I added a couple trades on Friday. Those clearly are not working. But if you start thinking about adding today, give it plenty of time on your horizon, I think, and then also scale in, and make sure that you've got a support level to trade against. All right, that's it for today's video, and thanks for watching.